Sampath Reddy is joining us now to talk more about markets. Sampath, afternoon. Sampath, the one thing which stood out in the earnings so far, and I'd like your thoughts on that, is that the earnings, bulk of them coming so far, appear to be coming on the margin front and the profitability front. The top line growth of corporate India continues to remain slightly on the softer side. Is it a bit of a worry for you? Or do you see going forward top line growth, which actually is a reflection of demand, actually gather pace in the coming quarters?
Today we have to see the earnings in the context of 2 years of very strong earnings growth on the FY23 and also on the FY22. You recall the earnings have grown almost 50-60% both the years taken together. On that strong base, this year earnings are likely to grow in the region of about 14 to 16% for the FY24 as such. So based on that, strong base effect of last couple of years, I think 15 to 16% earnings growth is quite good. Yes, within that, earnings growth also mostly coming from the margin expansion. Some of it is because of softer commodity prices, because whether it's aluminum or steel, which were strong at about a couple of years back, and even the crude also been quite stable for the long period of time. So because of that, I think there has been a positive tailwinds in the form in the margin side. So some of its growth is actually coming from the margin side as well. But net about 15-16% earnings growth this year, and the robust earnings growth in the last couple of years, I think is a good outcome. Going forward, FY25 and 26 also at the moment, the consensus estimates are in the range of about 12 to 14%. I think that's still reasonable in terms of earnings growth expectations. Only challenge is overall the valuation as such. The valuations have moved up a lot in the last couple of years. I think that's the only worry for the market in the near term. But otherwise, growth story continues to be very strong.
Out of the, okay, I want to understand from you, what's happening in the hotels and hospitality space. The numbers have been very strong. Do you see value, or even from here on, which phase of the cycle are we in hospitality in your view?
Yeah. So I think, hospitality as a sector has been a huge surprise for us. Especially if you look back and see the, ARR for the hotel industry as such, was very strong about a year back. All of us thought that it is more like, after coming back after the 2 years of, low occupancy and low rates, it's more of a cyclical upturn coming out of the COVID slowdown. But it looks like, from there onwards, also the hotel rates, kept on moving up. When I believe nowadays the vacancy, you don't get a room, less than 30,000 rupees a day. So, the rates have gone up a lot. I think the demand continues to be very strong, and it has been a huge positive surprise. I'm not sure whether these rates will, remain at this level for a longer period of time. But at this juncture, they are, positively surprising in terms of, the overall upward movement in the ARR, because of which, the profit growth will also be quite strong. Not sure how long will this prevail. So I will be, let's say, I will not go, I'll not decide the, hotel stocks valuation based on the current level of profitability, which, may not be sustainable. But if you adjust for this, cyclical peak in terms of ARR, how the profits look like, how the valuation look like, that's how one has to, look at the hotel stocks. At this juncture, we really don't have a strong opinion on them. But yes, the sector is, I would say, at a very, very good position in terms of, very near-term earnings.
Okay. Sampath, I also want to understand which part of the PSU pack do you see good, valuation upside even from here? Or where do you think things are getting baked in fully? We have PSU banks, engineering, PSU oil and gas, PSU. What have you?
The PSUs, rail and defense sectors, I think, the valuations are really, I would think, fully baked in, or, probably gone to the higher end of the valuation zone. Where the valuations still look probably attractive, or I would think, oil and gas as a sector, PSUs and oil and gas as a sector, still valuations are reasonable. And even the BFSI space, not necessarily that, IRFC and ERDA kind of NBFCs, which are relatively new ones, but, PSU banks as such, still the valuations are not very expensive. Historically, the valuations are of the PSUs have traded relatively attractive or a lower end of the market spectrum, but even at an absolute level, PSU banks are still look reasonably valued. And also, the power sector as such, valuations have expanded a lot, especially the clean energy power generators and even the transmission, etc. If you see, there also valuations have expanded a lot. But if you see the attractiveness, very few pockets of PSU, there's attractive valuations which is prevailing. I would think that is mostly the oil and gas space.
Sampath, are you comfortable right now getting into the one area of the consumer space, QSR? Hasn't moved a whole lot. Some of the FMCG companies, volume growth has been very anemic. I think the only thing which is in favor is the valuation, but visibility of return is not very high. Would you nibble there?
Right. So I think the overall consumer as such, the earnings growth has been muted. Even the volume growth has also been muted. But to give the credit, the valuations have also corrected in the consumer sector. I think, but especially in the QSR, they are also going through the very weak demand situation for the last couple of quarters. It may prevail for a couple of more quarters as well. But these are the new high growth emerging sectors. The QSR, especially the very high growth emerging as a category, they will have a very superior growth for a long period of time. And because of that, I think it's a good time to buy. Last couple of quarters have been very poor growth for them, and even doesn't look anything great for the next immediate quarter or a couple of quarters. But these are the time to buy such good quality franchises at which have got a long-term growth potential. The valuations at this juncture will be very, very attractive. I think the timing point of view, this would be a good time to get into the QSR as a space.
One last word before we let you go, Sampath. You must have seen the way industry leader in the agrochemical, specialty chemical space declared the results. In fact, many of them are actually talking that there's very little visibility when will things turn around. Would you venture in that space, agrochemical, specialty chemical space selectively or not yet?
Yeah. I think as a chemicals as a space, I would be a little cautious. I mean, last 3-4 years, they have had a very good earnings growth, and people thought that it is more of a structural in nature. But I would have my own doubts. It could be largely cyclical upturn that could have led to the huge growth in earnings. There isn't at the end of the day, most of the products are, I would think, more commodity in nature. If you recall, most of the API and chemical companies who are trading at a much superior valuation to let's say that of a formulation companies in the pharmaceutical sector. That was never the case in the last 15-20 years. So just that last couple of last 3-4 years, they have had a stupendous earnings growth. Maybe because of the China supply related issues or whatever could be the reason. And that's when the valuation got re-rated significantly higher. I would prefer to play the pharmaceutical generic exporters rather than the chemicals and specialty chemicals at this juncture.
All right, Sampath, we'll let you go on that one. Thanks so much for joining us on the show today.